Are European investors doomed? Well, here's the thing. If you are a European investor, you see that European stock market indices are lagging behind American indices for last 15 years. And if you want to invest in European government bonds, you will make less money than you would if you would invest in American bonds of similar maturity. So, what should us Europeans do? Completely skip investing and spend all our money because there is no point, or we still have plenty of investing opportunities out there? About that stock investing, here's the thing. If you look at historical market performance and if you compare like Euro Stoxx 60 against same indices in America, you will see that actually performance since late 90s till financial crisis of 2008 was actually quite similar. And if we go to the past even more, let's say from early 90s, we would see the German stock market index actually performs similarly as is S&P 500 in the 90s. And this is pretty awesome given the fact that in those years America had greatest bull market in history. So historically European stock markets haven't been that bad. Problem is with last 15 years and Europe's problem with lack of technological giants which contribute to most of the growth in American and global companies. And what about those government bond returns? Well, regardless if you are looking at American government bonds or European government bonds and deduct inflation from these returns, you will have extremely bad returns regardless whether you are looking at America or Europe. So this actually is no objective comparison because you wouldn't make money anyway. But question is now what to do, how actually Europeans could navigate through this identity crisis and actually make some money. Well, first things first. Now this is not 1920s anymore and we could actually invest across the globe. Just go to ETF.com and see for yourself that as a European you will have European ETFs that invest across the world, whether this is America, Asia, Europe or global stock market indices. You could invest in all of these indices as a European for really low cost. And secondly, you could also invest not only the whole market indices, but you could actually invest in specific strategies which tracks value investing, growth investing, dividend investing, or even go straight after commodity ETFs which invest in commodity baskets or go for something more aggressive such as crypto ETFs. So if you live in Europe, actually you don't have problem because you could diversify across the world. And even unfortunately, if Europe is stagnating and don't produce much growth in tech sector, you can invest in tech companies in Asia or America and make money there. Use today's advantages of global world and invest globally because it's actually the smarter move. If you live in Europe, it's better for you to diversify across the world than to simply invest in your own country, in your own country's stocks or government bonds, because diversification, as professionals say, is only free lunch in financial markets. Secondly, if for the last 15 years United States actually have been outperforming European stocks, that doesn't mean it could continue in next 15 years. Truth is, none of us know what will happen with global stock markets in America, in Europe or anywhere else. We only know the fact that historically American stock markets have been yielding approximately 10%. And I have good suspicion it will continue like that because United States corporate culture is slightly different than European, namely by the fact that Americans have real importance in stock market. Employees, management, shareholders, they are all gearing up to get maximum amount of shareholder value because all of them have shares in their portfolios. Employees get their shares if they work. CEOs and top management get shares as a form of compensation, so they have really low base salary, but they have huge bonuses in terms of stock options. So that means if Europeans don't want to lose their international share even more and see how their best companies are registering and trading in American exchanges, they'll be first to adapt American corporate governments and start to think more about their shareholder value and how to maximize their trading activity in European exchanges. As for bond investing, actually Europeans have pretty interesting products in investing platforms and they have really undervalued corporate bonds which gives huge yields with really good payout history without any default or delayed payments, which could give you 8 to 10% yield per annum, which is spectacular. There are many investment platforms like that and there are many corporate bonds like that which will give you exceptional results. And actually what you could do, you could actually stick up full portfolio with global stocks and high-yielding fixed income securities, whether these are corporate bonds or another type of loans, and you could actually get 10% return by having global exposure. So European exposure to fixed income securities or corporate bonds made in Europe, and global exposure to global stocks. This is the approach with which you could actually have pretty outstanding results. But no one says that you cannot invest in European stocks, and as I told you previously, for decades European stocks haven't been worse than American ones. But we don't have technological stocks, and technological stocks are driving global stock indices right now. So, conclusion is simple. Believe in Europe and be prepared for underperforming stock markets if technological revolution continue, or invest in global stock market indices and combine this with investment platforms and corporate bonds in Europe, which offers surprisingly high yields given the fact that they have really good payout history. That's your best move. Global stocks, European fixed income securities, and you'll have great investment portfolio.